IT companies are staring at yet another subdued quarter. Continued macroeconomic uncertainties, hiring slowdown, extended furloughs are just some of the troubles faced by the Indian IT services companies in the previous quarters. Now, Q3 management commentary hinted at a bottoming out of revenue slowdown, but uncertainty over the timing of a rate cut in the US could further delay a recovery in discretionary demand. Accenture's recent debit earnings and weak guidance got the analysts further worried about the fate of the Indian companies in FY25. So what are the key factors to watch out for in the fourth quarter? Well, keep watching this video to find out, but first, don't forget to like and share this video and subscribe to the Money Control YouTube channel. Now, with muted discretionary spending and a slowdown in new large deal wins, the sector is bracing for another quarter of muted growth. The seasonality factor seen in Q3 may be out of the way, even furloughs may have fizzled out, but a sustained recovery will only depend on a firm rebound in discretionary demand. Now, brokerages say that sectors like banking, high-tech and telecom will continue to underperform as macroeconomic concerns persist. A global brokerage Jefferies believes that aggregate revenue growth in the March quarter is likely to remain under pressure. It expects only TCS and Coforge to post any meaningful sequential growth. With a forgettable year out of the way, investors will keep a close watch on guidance numbers for the financial year 2025. The global IT giants like Accenture, Cognizant and Capgemini have all provided weak guidance, indicating a sluggish start to the year, with recovery anticipated only towards the latter half of 2024. Now, Antique Broking anticipates conservative guidance from companies initially, given the muted near-term outlook and weak exit rates. But despite these challenges, the medium-term outlook for the Indian IT sector remains robust, buoyed by sustained investment in cloud and digital technologies. Hiring plans of most IT companies are expected to remain subdued, with campus placements yet to be completed. Now, back in January, Infosys had said that it sees no immediate campus requirement. But there's good news on this front as well, as tech bellwether TCS has begun fresher hiring, bringing huge relief to engineering graduates. Now, Nomura believes IT companies will restart hiring likely in FY25. The street would keep an eye on management comments on hiring. Operating margins in the fourth quarter across Tier 1 IT companies are likely to remain steady. Analysts at Kotak Equities expect TCS to see a reasonable margin improvement, while they expect Tech Mahindra to benefit from the reversal of one-off impacts from unprofitable contracts. Now, Wipro, on the other hand, is expected to report a moderate decline in margins, whereas HCL Tech may face a margin impact due to seasonal weakness in the products business. Now, according to GM Financial, factors like residual impact of wage hikes, visa cost and lower software revenues are among some of the company-specific headwinds in the IT sector. Any guidance on operating margins for the fiscal year 2025 and the levers to achieve that will be closely watched out for. One of the biggest trends at play right now is the change of leadership and CEOs seen at 3 out of top 5 Indian IT services companies. The latest one being the departure of Wipro CEO Thierry Delaporte. Now, after several quarters of underperformance at Wipro, all eyes will be on the strategies from the new CEO to turn around the business amid a tough macro environment. While Wipro has appointed veteran Srinivas Pallia as the CEO, Tech Mahindra is experimenting with an external CEO, Mohit Joshi, who has spent over 2 decades with Infosys. Now, the street would keep an eye on the direction that the new management would give to their companies, especially at a time when the industry has been navigating all-round headwinds.